Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you like the program, remember, sharing is caring. So please give us a like, subscribe, share it with your friends, share it with your enemies. My guest today is Nicki Ramsay. Nicki is Singapore-based CEO and founder of CardUp, a fintech dealing in, you guessed it, credit cards. But it's a very fluid environment, highly competitive, very dependent on the kinds of deals that Nicki and her competitors can cut with banks, with payment processors, and with the companies themselves. Nicki, great to have you on DigFin VOX. Thanks for joining.
Thanks, James. It's great to be here. Thanks for inviting me today.
Let's just talk a little bit about CardUp's evolution as a business, as a way to highlight what else is going on in card payments. You start off more of a B2C, direct-to-consumer model. You've evolved that into more of a B2B. Why is that? What's happened there?
Yeah. So you're totally right. When I launched the company, we were more B2C. So really helping individuals make use of their credit card to pay for sort of big ticket items that they couldn't put on card previously. So imagine, for example, paying your taxes to the government on a card. But I think we really quickly saw that we had businesses using us, so particularly SMEs, and realized that we perhaps hit on a even bigger opportunity, which is actually to help businesses make use of an available line of credit, which many of them have already sitting in their pocket, right? Which is their card, to essentially defer their payables to their vendors. And so it was through the sort of the uptake that we saw from businesses that we dug deeper into that, spoke to customers, and just realized the power of sort of expanding and evolving our product into the B2B space. So it's not to say we don't have the consumer product, but I think we really believe in this sort of universal pain point around businesses needing cash flow and sort of payment automation. So we went off down that track and have sort of evolved the business ever since, and now operate a really sort of two-sided platform that helps with both payments as well as collections, really helping to simplify the lives of business owners by bringing everything into kind of one place.
What's the difference between what a company like CardUp does versus like those fintechs that are in factoring or invoices, stuff like that? Do you see yourself as competing with them, or are you offering a kind of service, or are the kinds of expenses involved here so different that you would never kind of come across those types of companies?
Yeah, I think a couple of things on that. One is that CardUp and the team and myself and the team, we are at our core like payments people and payment specialists. And so whereas a lot of those companies are sort of approaching it more from the lending perspective. So there is definitely sort of some overlap, but I think really the core expertise for those guys is more on the lending space, and ours is more in the payments. So when you think about the benefit that we're bringing, whilst it does have an element of improving cash flow and working capital, there's a lot more to it. I mean, we're really like a software company, so it's payment automation, it's receivables, it's helping kind of even with communication between a buyer and a supplier, and I think we actually partner with some of those players. So because we don't directly lend currently, we can often partner up with them if we see a company that needs sort of additional credit beyond what we can offer through our core product. So I would say, some similarities. And then the final point is also just customer segmentation. I think a lot of those players have also kind of cropped up to serve perhaps a segment of the business market that haven't been able to get financing through the more traditional means, maybe a traditional bank player. At CardUp, we tend to, whilst we do serve that segment, we tend to also have a large segment of customers that are actually more of the sort of banked players, because we work very closely with kind of banks and financial institutions who are giving them the credit line.
Because they have a card to begin with. They've got a card to begin with, so they've got to have a bank card, right? Yeah, exactly. And when you're working with an SME, or maybe an owner of an SME, if that person might be considered an individual, do they tend to be using cards that are from the consumer side of a bank, or are they on the acquirer side? And does that matter?
Yeah, so it's a really good question. So you mean a consumer versus a commercial card, right? A corporate card. Yeah, it's a really good question.
Well, both consumer versus corporate, but also, when in that, the classic 4-pillar payment structure, right? You've got the banks that are providing the cards to the buyer, and then the banks that are providing to the merchant. So I don't know if that's the same question or if there's a nuance there.
So from a merchant acquiring point of view, so
Yeah.
in terms of like collecting card payments,
Yes.
yeah, so I would say that on the buyer side, a lot of our customers most of our customers have a card from either a consumer card or a corporate card, but they have a card product. On the recipient side, that's definitely not the case, in that the whole kind of purpose of our solution is that we help merchants that perhaps haven't been able to adopt the existing payment gateway solutions or even the merchant acquiring solutions that the banks offer for a host of different reasons. And we have a product line called CardUp Collect that kind of comes in to address that and helps those businesses. It's popular particularly amongst more traditional kind of offline companies. Maybe they haven't got the technical expertise in-house to kind of go and hook into an online payment gateway. And that's really where we come in with this kind of no-code solution.
And where's the growth for you right now? Because you've got these different angles to what you do. Yeah.
So I think we kind of have we're like firing on 2 cylinders in a way. Like one is around kind of product development and diversification. There's just so much we can do. And it's actually one of the challenges within the team, because there's no shortage of like opportunities and pain points that we hear, but it's of course, how do we prioritize those and how do we deliver like the most value back to customers fastest? So that's kind of one work stream, and then the other is regional expansion. So as you may know, we expanded last year into Hong Kong and Malaysia. So there's a lot to do there. And whilst the pain point and the sort of that we're solving and the value proposition is very similar, the markets are also have their nuances and their differences, and that's obviously one of the challenges with scaling fintech across this region is the fragmentation and how. Whilst we have adopted a pretty similar go-to-market approach, there are certain ways in which we've had to localize.
Do you see any changes, improvements on that front, or is there any discussion around harmonization or trying to make lives easier, or is it, or is this going to be the eternal
exactly? Yeah, I mean, we fall under in Singapore. We fall under the Payment Services Act, so we're licensed by the MAS. We hold a number of different licenses, and I think. What we do see is obviously other markets looking to that and looking at what Singapore's done and sort of taking a note out of the regulator's book here. And I think that might be a great step in the right direction in terms of harmonization from a regulatory perspective anyway. I would hope that the regulators are keeping that in mind and looking at how other markets in the region are approaching some of this legislation. But ultimately, from a local kind of payments infrastructure perspective, unfortunately, there's still a lot of disjointed connections and so on.
There's a lot of new opportunities in your business and businesses like what you do. How durable are these different ideas? For example, if you I think last year we spoke, and you mentioned that COVID had created an opportunity where SMEs were not using their credit cards for travel and entertainment because they're locked up and they couldn't travel. So maybe they could use it for something else. If that's the kind of activity that fintechs are able to jump on, are those one-offs, one-hit wonders, or do they lead to enduring kind of business opportunities? So how fluid is the space?
I mean, I think it's extremely fluid, and COVID's just kind of made that even more so. But I also think that any entrepreneur probably knows it's really about kind of constantly evolving and keeping up with market trends, but also listening to customers, and especially in the payment space or fintech space in general, because it's just so dynamic and there's so much happening. And so, I don't think any of us in the fintech world sort of believe that the product you put out sort of 3 years ago is just the only thing you're going to need to do, and the business will just grow and become a very large company just with that. It's constantly sort of an evolution, and either adding new products or services, or sort of staying focused on the mission, but deepening the way in which you sort of deliver that and execute on it.
What do you think are one or two of the big trends right now that are going to impact your business and the use of fintech plus cards to create new opportunities for small businesses?
Yeah, I mean, I think the great thing about the space we're in is just sort of how the shift in the market shift has taken place in the last sort of, I would say, accelerated by COVID, probably in the last year to 18 months around SME digitization, and in particular, a sort of willingness to adopt digital solutions or technical solutions. I think there's still obviously a skills gap around that, and it's also probably, I believe it's very complex for a lot of business owners being hit with so many different solutions to really understand the intricacies of each one and how they can benefit them. So I think we as sort of the fintech community, we need to do a really better job or make that easier for these business owners. But the great thing is that there is this intent and drive to move to kind of cloud-based solutions, to automate, to digitize. And so I really feel like we're very much in the right time and right place from that perspective. And then the other major trend that we're seeing is, I think, quite a big focus on cards in the corporate space, actually. I think there's obviously been a lot of debate around the longevity of cards, particularly in this kind of part of the world, when you look at a lot of sort of new payment methods that are springing up. But obviously what we've been seeing in the US, and I think that trend's followed over here, is just the rise of sort of non-bank card issuers. So there are some very, very large players already in the US who have rolled out corporate card products and really kind of filling a gap in the market or a need that the banks aren't addressing currently. And I think we're seeing that same trend happening in this part of the world.
Yeah. What's an example or two of companies that are doing that in Asia?
Well, here in Singapore, we've got companies like VoloPay or Aspire, both of who are offering corporate card products. Not the only thing they do, but it's one of many product lines.
Where do you fit in that? Because on the one hand, you've got banks that you're partnering with, and you sort of offer them a way perhaps to stay relevant as virtual banks are coming up. Aspire obviously would be in that VB category. So are virtual banks your friend? Are you helping banks compete against them? How do you kind of navigate that?
Yeah. I mean, it's a really interesting one for our business model, because we've always taken a very heavily kind of partnership-driven approach, and I think that's kind of continuing actually, even with all of these different players that are coming up or up and coming. So we've partnered traditionally with the banks, and I do think that's a very specific customer segment. That probably the likes of Aspire are not really tapping into. Certainly, kind of and it's a benefit for us, right? Working with the banks, we get to perhaps get to work with customers that are more at the enterprise level or larger corporates, which is, can be very hard to find those opportunities as a, smaller fintech player without having an investment in very, very large kind of enterprise sales team, right? So I think that's, quite an effective model, and it can bring, it's a win-win, it can bring benefits to both sides. But as we think of more sort of digital players coming out, there are still opportunities and ways in which we partner with them. In fact, we partner with like peer-to-peer lenders and even some of the card issuers. It can be our collections product, or it can even be just providing our sort of payments infrastructure to some of these players to help solve very specific payments problems that sits within their own platforms that maybe they don't want to take on themselves. So we have sort of different permutations of different partnerships.
Business owners have a lot of choices right now. They have to do things differently, but there's a lot of competition out there. They're getting pitched by banks, by Visa and MasterCard, by other fintechs out there. I guess when it comes to the card piece of it, what is that value proposition now? How is that changing? I mean, we talked about helping them, get access to some financing a little bit sooner and stuff, but is that the real value proposition?
No, I think first and foremost, it's really about two things. One is automation and one is kind of controls, right? I think for what cards brings is the ability for a business to track spend across the company in a very digital way with all the right reporting tools. And it also means that the business owners or the head of finance can put certain controls or restrictions on the ways in which different team members are using those card products as well. So it can be a very kind of just seamless expense management solution. And I think that's why some of the fintechs we see in the card space, they haven't even launched a credit line yet. Actually, they're just focusing on really that expense management piece first and foremost.
You live by your partnerships, but you could die by your partnerships if those partners decide to move on with a different model. So how deep is the moat that you've got here, Nicki, in terms of having a proposition for a bank that makes them decide that it's going to be sticky, they're going to grow with you, as opposed to they say, we could probably keep these fees to ourselves and we could serve a lot of this ourselves if we just upgrade our own technical expertise.
I think it's all about understanding their requirements ultimately, and that's always what we've done. And the solution that we offer to the banks today actually looks very different to 3 years ago, but we've evolved it and we've structured it in a way where both parties can benefit. So I think we're not saying that, oh, this is exclusively sort of our service and this is theirs. And if they could, I think it's much more of just getting around a table and working out with them and saying, what are you trying to achieve? And ultimately there's always going to be an element of like speed and probably user experience that tech companies can bring to a financial institution that they can't do in-house. So, the partnership may look quite different with different banks. It does look very different with different banks because, to your point, some banks are much more, much further ahead in terms of being able to offer some of these sort of SME digital services themselves, not just CardUps, but across the board, there are banks which overlap with many other fintechs in the market. Yeah. I think it's really just understanding their requirements and how we can structure things in a mutually beneficial way.
What do you think the business for you will look like in a year or two from now? If it's changing this rapidly, you've already gone through a metamorphosis more than once. You're looking at the way the world's going. What do you think you'll be doing? Where will CardUp's edge be in a year or two?
Yeah, so I think our vision is really to sort of back to the point of simplifying the lives of business owners by bringing everything in one place, the sort of one-stop shop. So, that obviously means that there's a lot we can do. We have this sort of 3 value propositions around automation, cash flow management, and sort of rewards. And I think everything that we're building out is sort of deepening the way in which we deliver that value. And obviously that is a huge task. There's a lot of problems to be solved and ways in which we can sort of execute on that.
Yeah, because rewards is kind of how you and a lot of your brethren, your competitors in the space began, right? That was the starting point. Are rewards still a lucrative part of the value proposition?
I mean, it is, and I think it's really interesting, and maybe it's also sort of a testament to the markets here and sort of the consumer mindset, which is very savvy around sort of being able to save money through rewards and rebates. So we still see that demand. I wouldn't say that it's our kind of core, like the way in which we go to market. I think we're a lot more than that. It was certainly at the hook at the start, but now we're a lot more than that.
It's hard to make money, right? Because you mentioned the savvy consumer. People know a deal. So I guess this leads to the question of overall, what's the path to profitability, and where do you see the revenue streams going?
Yeah, I mean, we are a very transactional, we have a transactional revenue model. I think that's evolved though over time to include multiple different transactional fees. So, at the start, it was just a sort of transactional fee on the actual payment itself. Now with products such as the invoice automation sort of features that I mentioned, and that could be actually in terms of the volume of invoices you're processing. So there's different revenue streams that we have.
Is there a point where you're going to have to think about actually becoming a lender yourself?
It's definitely something that we are looking at. Yes, I think I wouldn't go as far as to say a lender, because I do believe that they're fundamentally very different sort of expertise and skill sets to do both very well. But of course, we touch the cash flow management space. So of course, there are ways in which we can like deepen that. And I think, one of the really interesting trends at the moment is the entire sort of buy now, pay later solutions. And that's an interesting model because it's, I think that's the sort of hybrid between payments and lending. Again, I wouldn't say that they're a lender, they're a payments company, but they obviously touch on lending. So I think that feels like a closer fit to our business model than to say, oh, we would actually become a sort of full lender. Yeah.
So that could be the next arrow in the quiver, would be some sort of buy now, pay later capability, either doing it directly yourself or helping a bank or someone else do it themselves.
Yeah, I mean, it's a natural sort of progression in terms of I think the value we can deliver, and we do already have some solutions that we offer to a small group of customers around that.
Okay. And last point is, I guess, what's the vision for you in terms of the business itself? Get big and become the 800-pound gorilla in this space in Asia, or get acquired, or something else? What do you what's the, maybe not the end game, but the the longer term vision?
Yeah, I mean, I think this is such a super exciting space to be in at this time. I mean, the sector is just very hot across the region, and there's so much transformation and the speed of change. And I think probably for the first time ever, we're seeing innovations coming from Asia and sort of being adopted back into perhaps the US or Europe, which is very different to sort of 10 years ago, I think, when we saw a lot of the innovation coming from that part of the world.
Yeah, what's one great example of that?
I mean, all of the super apps that are taking place. I mean, that's something I think that the players in the US have really sort of taken note of. And but that wasn't really a strategy.
Yeah, but is that something where, like, a fintech like CardUp is? I mean, are you trying to get onto, a Grab or a GoTo or a C kind of experience, or how do you kind of turn that into something for a fintech like you?
I mean, it's very, very different. I would say it's not that's definitely not a sort of strategy we're pushing for. And I think back to staying true to what we're really good at and how we can serve the customer. But I guess sort of where I was coming to on that is that to answer your question about sort of the end goal, I think it's a really exciting time to be in this region for that reason. And so right now we're just really busy kind of building and making CardUp a much bigger regional player.
Nicki Ramsay, thank you so much for joining me and talking about what's going on in card fintech.
Thanks, Jame.